Hello and welcome to CanadianAgMarkets.com. My name is Brian. This is brought to you by Ireland Como Lafoy. We are grain marketing analysts and consultants here in Western Canada. All right, we're going to bring you our market update today, and we're going to start off with canola because it is the shining star of the Canadian ag markets today. So we're just going to kind of go through some of these and talk a little bit about each of the markets that we think are interesting today. So canola gained some strength in nearby contracts today after Canada avoided any additional tariffs under U.S. President Donald Trump's sweeping new tariff scheme, which was announced yesterday or Wednesday, the 2nd of April. Almost all other markets were universally weakened, but canola was higher as fears of trade barriers affecting the seed and the canola oil dissipated to some degree. Canola settled up today at $9.40 or settled up $9.40 at $635.90, and at some points during the day it was more than $16 higher. So let's talk about some of the related commodities to canola oil. One of them, or canola, which one of them is soybean oil. Soybean oil was actually weaker along with crude oil. We'll get into crude oil here in a moment. Soybean oil had been seen as the leader here, helping canola values move higher, but the weakness today in bean oil did not translate into canola, which is a good thing for Canadian farmers today as well. So canola is kind of acting a little bit rogue, a little bit on its own and trading a little bit on its own fundamentals. That was really good to see some of those fears abate out of that market. So let's talk about crude oil here a little bit. A double hit for crude oil today as Trump's tariff news sparked fears of a global trade war that would likely trigger slow economic growth. But then 8 OPEC plus countries unexpectedly announced that they would increase oil production by 411,000 barrels per day in May, far more than the planned 135,000 barrels per day. So crude oil prices dropped over 6% today as a result, giving up almost all of the gains seen in the last month. Crude oil settled down 6.9% lower today, down almost $5 a barrel at $66.76. One other market related to canola I want to talk to you about, Euronext rapeseed, which also fell sharply as threats of tariffs against Europe threatened futures markets there. Canola did really outperform its peers today. So we saw crude oil lower. We saw Euronext rapeseed lower. We saw soybean oil lower, and canola still managed to rally, which is a very odd thing to have happen, but I'm sure one that many of you are happy to celebrate today. We'll get into the Canadian dollar a little bit as well in a second here, because that may have had, we could have seen even larger gains in canola had the Canadian dollar also been stable or had fallen. But we'll talk about that in a second. Quickly want to run through some of the other commodities that affect Canadians here. Wheat held steady today. Minneapolis was the one that took the smallest of the losses. Wheat still was lower versus yesterday's close. They posting a 1.25 loss in Minneapolis, 3.5 in Chicago, and actually only 0.5 cent lower in Kansas. So relatively, the tariffs today on wheat weren't felt as much as some other commodities. It may still be yet to come, but I think wheat is just more of a global commodity in general and is seen as less susceptible to U.S. supply and demand issues. So good news. I mean, wheat's still trading near the bottom of most of its trading ranges here. As you can see here, Minneapolis is lower than the 20-day moving average. So, normally this time of year we start to see some strength in wheat prices as the growing season in North America kind of kicks it into high gear. But right now we're trading near lows. We didn't see a whole lot of losses this session in the wheat complex, which is good. Soybeans did see some major losses today, gapped lower as a result of the tariffs. Soybean futures dropped towards $10.10 a bushel, which is their lowest level since March 26th. Again, these are amid concerns that, U.S. tariffs could prompt retaliatory measures against American farm products. Over 40% of U.S. soybean production is exported, and then more of that if you consider the oil and meal. Corn also saw heavy losses in the session today, but ended up recovering most of its losses, actually, to only close 0.25 cent lower on the day. Corn has found some support a number of times this month, just north of $4.40. So there is some support under corn here, even after we saw some large acreage release from the USDA earlier this week as well. All right, let's get into a little bit of the macros here. US dollar index took an absolute kicking today, tumbled about 2% to 101.8 today, marking its steepest single-day drop in over 2 years and hitting a 6-month low as traders reacted to, Trump's tariff announcements. The world, as the world's trade and reserve currency, less trade overall in the world means less demand for U.S. dollars. So one of the reasons for the big hit here, this is a large setback for the U.S. dollar. But where there is a bear market, there is also a bull market, and the Canadian dollar saw the reverse of the U.S. dollar index today, rallying to over 71 cents U.S. This despite a large drop in crude oil. The Canadian dollar is oftentimes sensitive to the value of crude oil, but today the two diverged significantly. This may have had some negative implications to, wheat, soy, and other cash grain basis that trade in U.S. dollars, or where the futures are denominated in U.S. dollars, and may have actually kept a lid on gains possible in canola futures as well. Maybe that's why we saw some late session pullback in the canola futures to kind of compensate for the rise in the Canadian dollar. Hard to say, but generally speaking, a Canadian dollar will lower basis values for U.S. denominated futures, cash prices, as well as canola futures prices. But so it may have had a bit of an impact, or it may start to be felt as we move through the last day of this week. Just to touch a little bit on the stock markets today, because normally I'm not going to talk about stock markets in this commentary, but today we did see a pretty big pullback with the S&P 500 sliding about 4%, wiping out nearly $2 trillion in market value and pushing it back into correction territory. The Dow plummeted over 1,400 points. NASDAQ sank more than 5%. Concerns over economic growth and supply chain disruptions weighed on investors as the 10% baseline tariff, along with steeper duties for key trading partners like China and Taiwan, where a lot of our chips and semiconductors come from, or the U.S.'s chips and semiconductors, took center stage. So the stock market definitely saw some large weakness as we move through the day today. All right, thank you for listening to that. We would like to encourage you to subscribe to our insights. We do a lot of insights that get sent directly to our customers. You can subscribe for only $99 a month. Our subscribers get all of our publications that cover Canadian grain markets, including our own proprietary fundamental analysis, technical analysis, and risk management education and recommendations. Again, that's $99 Canadian per month. We won't try to sell you anything else. You can cancel your subscription at any time. So go to CanadianAgMarkets.com to subscribe. All right, thank you very much. We will see you again next time.